Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach and a senior manager with Schwab, and delighted that you are joining me today. So, what are we going to talk about today? Well, today I thought it would be interesting to talk about trend, changes in trend, and specifically when we see an entry as defined by a technical analysis parameter, how can we determine a target? And there's lots of different ways to do that. And so we're going to look at 3 or 4 different ways that we might establish a target using technical analysis, and we'll play some example trades and we'll just see how those work out. So that's what we're up to for this next 45 minutes together. I want to thank Scott Thompson for joining us in the chat. He's a friend, a fellow coach, a manager in our department now. And, when I was a client, as many of you know, I started as a client. That when I was a client, Scott was one of my favorite instructors, and I followed a lot and teach now a lot of, what I learned from Scott. So he's pretty familiar with all these strategies because many of them I learned, from Scott. So if you aren't following Scott and I on X, you're missing out. At Barb Armstrong CS, at Scott Thompson CS. You can now also find us on LinkedIn, so you can wander over to LinkedIn and follow us there as well. And know that we're going to look at a lot of charts today, and know that everything that we look at here is for general information purposes and educational purposes, and not to be construed as a recommendation to trade any particular stock or strategy. We are using the Paper Money software application on the Thinkorswim desktop platform. It is a great place to learn and hone your skills and make sure you understand what you're doing and how you're doing it, that you have a trading plan in place, and that you know how to maneuver the mechanics of the Thinkorswim platform. Know that there are some nuances or differences, and we'll kind of point those out as we go along. Also know that if we use a stop loss order, a stop market order, it doesn't guarantee that we're going to get out at the price we requested. Okay. Now, if you've never been to a live event, this is how I got introduced to, the wonderful world of trading and investing. You can go to schwab.com/events. Our next event actually isn't on this list because the registration is closed. That is in Santa Clara in 2 weeks. If you live in the Santa Clara area, you're welcome to come and register on site, and we'll do our best to find you a seat. But it's always, even though these are free to attend, we have limited capacity. And so you're always better to register ahead. And then if you can't come, you can cancel. But the next event will be the San Diego Marriott Marquee. That'll be a 2-day event, June 5th and 6th. Then we're back to Chicago, which is where we were for the first market drive of the year last Saturday. This will be a 2-day event, intro to technical analysis and intro to options. And then our next market drive in Dallas, the first weekend of August at the Gaylord Texan. Okay, so that's what we're up to there. And you can find that at schwab.com/events. Okay, so let's get out to the platform. If you're new to this and you have not been to this class before, feel free to type a greeting into the chat so we can welcome you. But when we look at the S&P 500, we see a bit of a bull flag pattern perhaps setting up. It's coming back to this previous high here. So we've had about a 3-day pullback. And, is Chicken Little warming up and doing laps? I would say likely not. After this tremendous a run, and if I take my drawing tool and we come from here to here, we hit a new all-time high in the market last Thursday. We were up about 19%. We're still up about 16 and a half, 17% from this low that we hit here back. What was that day? Oh, sorry, end of March 30th. So that's, been a hell of a run. And the NASDAQ is pretty similar. This is our tech heavy index. We're up slightly, today, and it's looking like a bit of a bull flag pullback. And again, a tremendous run up since that end of March. If you want to measure that, you just click and drag up almost 30% to the top, 27%. Excuse me. So pretty bullish all around. Our Dow, a little bit more, of a consolidation pattern, but still sitting within a stone's throw of the intraday market high hit here back on February 10th. And our small caps, have had a bit more of a pullback actually. And some would say the small caps act as a bit of a canary in the coal mine, but this may be indicating that we're reaching a support level here. We've got a big hammer type pattern at what has been a support level, and it's now kissing it for what, the fourth or fifth time. But with this candle pattern, we're looking for confirmation. We'd be looking for it to close above, the high of this low day tomorrow. And then when we look at the VIX, our volatility index, we're looking at something sitting, just under 18, which is, pretty reasonable compared to it where it's been, at other times so far this year. Okay. And if we're looking at sectors, and I don't spend a lot of time on doing a market overview. This is an intro to technical analysis for one, and two, Kevin Horner does a fantastic job 4 days a week. Every day but Tuesday, actually, he does an overview of what's going on in the market. But if we look at what sectors have been strongest over the last 3 months, we're looking at technology, which is looking pretty similar to the S&P and the NASDAQ, pretty bullish. Communications also looking pretty strong. And energy, which kind of, went through a bit of a pullback, seems to be coming back around the corner. Okay, so we're going to look at some energy stocks today. But one of the things that prompted what I wanted to talk about today was a conversation I had with a friend, and years ago, actually. And let's just say that her name was Diane. And I don't remember what the stock was, but when she had last talked to me about this stock, and I was a client at the time, that stock was trading at about $60 a share. And then we were talking about something else, and I said, "Oh, did you get out of that stock?" And she said, "Well, it's now trading at 38. I'm telling everybody to buy more because it's on sale." And I said, "But there's no sign that it's done falling." And when we finally sat down together, I, brought up Thinkorswim and walked her through a few charts. And so I thought we'd walk through a few charts today. And, by the time the dust settled on that stock, I still don't remember, what the stock was, but it was trading at like 11.50. And so, when we look at something, they say, the trend is your friend until it ends, or, there's all kinds of expression. One of them that came up today that had James laughing in his class was no trend, no friend. But if we kind of look at McDonald's, it's kind of been, I would say it was sitting with Humpty Dumpty and had a great fall. And there's no sign yet when one looks at this may be, you may say like, hey, this is on sale because it's, continued to fall pretty dramatically. But, if you look at this, I'm just trying to get, to hit a few, as many as I can. And then, we can duplicate this and bring this over. And it's been in this downtrending channel, but there isn't any confirmation yet that it's done falling, is it? Yeah. So, you look at this and you say it may be on sale, but there's no sign yet that they've stopped, the markdowns. And if we look at IBM, and I do have a fond spot in my heart for IBM because I used to work for IBM. I spent a decade there as a marketing rep and a systems engineer. But again, if we look at this has been downtrending. And it gone from 319 to 212. Like if we measure that, yikes, that's a 33% drop. It's dropped over $100 a share. And do we see that, just because it's had 4 up days in a row, I don't think the people that own a lot of IBM shares are popping the champagne yet. Because even if you're looking for a shorter term, I don't see a diagonal resistance breakout yet. This to me still looks like a bear flag. And why is that? Well, because it's characterized by, we had this one digression that looked like it might be a trend reversal. But from here, we've had high, lower high, lower high, lower high, low, lower low, lower low. So this downtrend is still continuing. And so, are the markdowns over? Well, we don't know yet. But we're not seeing signs on the chart that that's happening. So, and if we come and we look at CRM, kind of more of the same, like had a great fall. It was kind of like if you went from, because somebody said in James's chat today, that looks like a double black diamond at Tahoe. That is a steep fall. And then it kind of like planes out and joins an intermediate run, but you're still going downhill. You still have high, lower high, lower high, lower high, lower high, low, lower low. If we're looking at this as an intermediate trend. And then we have earnings coming. Now it could gap. I mean, this stock gapped up on this earnings, gapped up on this earnings. But then it didn't hold. And so if we're looking for a trend reversal, now some might say, well, that's the way you're drawing your chart. Like maybe you want to draw your chart a little differently. And kind of technical analysis, there's a bit of an art to it, and you might say, well, but this looks like a similar low, and so far it does. So could it be finally reaching the bottom of the hill, and then where might we look for it to break to the upside? Well, we might say, well, maybe somewhere along here. We had consolidation. This was acting as support. Could it act as new resistance? And if it breaks above this 192, then it's above this high, and it could start going sideways, and it could go sideways for a while. So, but what we're not seeing when we look at this is a confirmation that this downtrend may now be complete. Okay. And so, when we look at that, we might go, oh, interesting. I'm just going to keep on looking. All right. And so let's look at Adobe. Because Adobe, as I'm looking at things, I'll create a list. I'll create a page, like a bearish page, a bullish page. And so if I'm looking for a bearish setup, I can just go and look. And Adobe has been on the bearish page for quite some time. Like it's gone from 362 down to 224. But what we've seen since, the middle of April here is it's now starting to establish some higher lows, even though we're still seeing lower highs. And you may say, well, I didn't draw my top line like that. I drew it more like this. And, it depends on when you draw your line, right? Like so you may say, like, I drew my line more like that. And then it did kind of break out and it came back, but it came back in and came all the way back down. So you may say, well, it looks like it may be breaking out. And you may say, okay, but the jury's still out, because if this is our diagonal resistance line and it's been falling, and when we look at this is just a 6-month chart, if we go out a little further to a 1-year chart, it's fallen by 50% almost. If we go from here to here, that's a 47% drop. So you want to have some confirmation if this, breaks out, that this is truly a breakout and not a fake out. Okay, so yeah. So Julie, yeah, you've got it. Julie's saying, maybe look further back at these patterns, and especially, when you have a smaller chart, but you can see that the line is downtrending coming into your shorter time frame. This has been a long time rolling down the hill. This isn't skiing in Michigan. This is skiing, Park City, where the runs are 2.5 miles long. Okay. Okay. So, and when we see this, what do? Well, we make a note and we wait, and we wait. And, lows. So this is a pattern, and maybe it's just my inherently optimistic bias, that I hate seeing bearish patterns. Okay, I've admitted it. Let me just bring up my drawing tool here. So, and let me make this a different color. Okay, so we had this type of pattern, and it's not perfect, but what do we call this pattern? The OO pattern. This is an inverted head and shoulders, or sorry, a head and shoulders. I'm so used to saying inverted head and shoulders, but this is a head and shoulders pattern where it came up, hit a new high, then a lower high. Yeah, Jay, you've got it. It's a head and shoulders pattern. And so if we wanted to measure, like I had drawn a line, obviously, when it was back up here, but it would be at around that 290 mark. And so if you wanted to measure where you think this might fall to, you'd say, well, it's gone from 225 to 290. So you might expect a fall of about $65. So you'd say, okay, I'm going to go to this 224 level and subtract $65, and that might be a target. So if you were to own shares of Adobe, might you be considering exiting your position? Yeah, somebody's saying, is it Humpty Dumpty day today? No, Humpty Dumpty just is kind of debuting for the first part of the day. But we might consider with this just saying, okay, maybe I ought to batten down the hatches. And just because we have a bullish day today doesn't mean that it's a trend reversal. We'd want to see it cross back above this line, come back and bounce, and then move to the upside. But, if we wanted to do a bearish trade, what might we do? Well, we might come and say, hey, I'm going to wait for, this is our high day so far, a close below the low of the high day. Let me get rid of that line I inadvertently drew. Clear. Okay. Now, energy was one of the stronger sectors. So, if you don't have this scan, it's very easy to create a scan of all the sectors and save them. So, and if this has one of these little, I used to play darts. So I think of this as a dartboard, something with a dartboard or a bullseye beside it. this, every time you click on it, it will pull up all the stocks that are part of the energy sector that are also part of the S&P. Okay. And so, and I've linked this to the chart. So if you said, well, energy, and if you're wondering how energy is looking today, I just came over and here is the visualize on the Market Watch tab. We don't have a lot of red on this chart, do we? Baker and Schlumberger haven't moved very much. That's why they're kind of gray. But everything else is looking bullish. And if we look at the energy sector, it was kind of forming one of those double bottom patterns on the sector trend line. So if we come back to the charts, could we look at, could we just start clicking through? And, we can organize them alphabetically. But, when we get to ONEOK, what do we have? Well, we had a stock that was downtrending, hit a bottom, and then what happened? Because sometimes you end up with these V patterns where it just goes down like into a canyon and then it turns around and comes back up. But this is our inverted head and shoulders, right? And then if we were to draw a pattern, we'd say, well, let me just bring my drawing tool up again. Because if you're new to these patterns, sometimes they aren't inherently easy to see that we have this now, and now we call this, this is a bullish pattern. And we said it's gone from 64 to 76, so about a $12 range. We said 76, our target, we might have put a target in around 88. And would it have hit that? It would have. In fact, it went up to 95. So there's our, but if we'd put in that as a target, $12 above, that would have worked out not too badly in the end. But, what are we looking at now? Well, now what we're seeing is a consolidation where we had a lower high and then it came down and then we had a higher low. So this we call a pennant pattern. And although you can trade within the pattern, and we've done that on Devon, and we're going to look at, we are going to look at a trade we placed on an energy stock where, and we could have done this with ONEOK. We did it with Devon where it came down and it was bouncing, and we said, well, what if on this day where it was, we had a movement above the high of the low day here when it's bouncing off the support level, what if we just traded it back up to here? So trading, we can trade within a pattern sometimes. We don't have to wait for it to break out, past the pattern. It's just a different way of trading a pattern, but it is tradable. So if we look at this, we said, well, if we were interested in this stock now, how might we establish a target? Well, one of the ways to establish a target is to measure the width of this and say, well, it went from a low here of, if you look at this candle, the low on that day was 81.25 to 95.30. So the width of this pattern. So if I take 95.30, and we can also do it by just drawing. And you may say, well, I don't like to include the wick. So if we take the bottom wick out, that's still a $12.41 move. So then we could come over here and say, well, this started at 91.13. So I'm going to add to that 92. Oh, 91.13 was our start. And we're going to add 12.40. So we're going to make that 102, our target. 102, 12.40, 102, call it 102.50, which is right at the very top of the chart. And it's based on the width of the pattern. And it turned out this broke out and it just kept on going. Now, could it come back and bounce off this? Yes. Could it come back and blow right back through and come all the way down here? It could. But if we're looking at this as a breakout and we wanted to put a target on it, that's one way we might do it. Okay. Okay. So let's put our target at 102.50. Now we could do a swing target, up to the previous high, but we're basically at that swing target. So a swing target wouldn't work in this case. So we're going to come to our trade tab. We are going to right click anywhere on this line. We're going to buy custom with an OCO bracket. Now, where might we want to put a stop? Well, we might say we see this as being a support level here around, this line around what, maybe 90. Well, on this day, what did it close at? 91.25. So if we said 91.25, if it goes 3% below that, we want out. So that would be 88.51. And so we're risking, we're risking, about $6.50 a share. And so we're going to come to our trade tab. We're going to put our target of 102.50. 02.50. And we're going to put our exit at 88.51. And so both our target and exit are based on this pattern, this pennant pattern. Okay. And we're going to do 200 shares. So why are we doing 200 shares? We could do a position size of about 25,000. So if we wanted, we could actually make it 250 shares. Would be about 25,000. We're going to hit our paper clip. And then when we click anywhere on here, on these three lines, it will even those up. Good till canceled. Confirm and send. So we're buying 250 shares. The total investment is 23,747. We want to exit if it goes up $7.51 or if it goes down $6.48. And we're going to put that in our stock with a target. And the target, this is just a note from us to us based on the pennant pattern width. Okay. Now, last week, we did one on Devon that looks similar to Oak, also in the energy sector. And, this one had really, had a great run. It's still up 36% year to date, even with this pennant pattern. And when we looked at this last Tuesday, we said, well, what if we had our, and lately I've been saying, buy a new car, although I'm not in the market for a new car, buy a new car fund or Paris for Christmas fund or take the family to Disney fund or pay off your credit card debt fund. And you just want to do a shorter term trade. Maybe, a lot of your account is invested in longer term positions, but you wanted to do a shorter term trade. And so if you're looking at this and saying, okay, I see this bouncing, what if I bought some shares and then just sold it when it came up here? Now, for those of you who like to trade options, could you have done a long call with the same kind of, thought process and target behind it? Absolutely. So, but our target was $50.50. And what has this hit today? $50.37. So I like to run a semi-democratic class. So when we come over here and we look at Devon, we're up $1,100. So my question to you is, do we take the money and run? Yeah, somebody is saying a go see the grandson fund. Yes, I'm going to see my grandson and his brand new hot off the press sister this weekend. So I'll be sharing some pictures. So yeah, 1102. So do we take the money? So I'm going to put in a little poll and the poll is going to say take the money and run, or do we hang out for that extra Q Steve Miller here on Devon? Yeah, and you know what? I don't have a sell half. So we could do that. We could sell half of it, because we have 400 shares. Or we could just say, you know what? Our target was 50-50. It came up to 50-37. We're at 49.87 right now. We're going to say, hey, we're close enough. Or we're going to say, hey, we own the shares. Even if it pulls back, we don't care. We're okay. And so there's a poll there, and go ahead and respond. Now, what some people might do, I'm not saying that, all traders would consider doing this, but they might say, well, you know what? If it does come back, like let's say it comes back to 46, could we do it again? Could we buy that same 400 shares again and put in that same target if it comes down and bounces? Yeah, because until you take an unrealized gain and turn it into a realized gain, what the market giveth, the market can taketh away. Let me just say that. Has anybody ever seen that happen, or am I the only one? Yeah. Yeah, so somebody's saying, well, we could sell calls here, but that means we're going to stay in the position. But yes, we could do that. I like the way you're thinking. But this is a getting started class, so I'm trying to, think simplistically here. But if we sold calls here with the expectation that it might come back, actually in our trading a smaller account, we did do a buy right covered call at 50. And so we're, in that position. And the goal on that is to be called out. So in this one, I'm trying to keep it a little simpler. Okay, so we're going to go ahead and exit this position, okay? And we have an exit in place. So I'm going to come down to Devon because we had a target and an exit. Okay, so we are going to cancel that. And then when we come back to this position, you can see that there's no longer a little chiclet beside Devon. So we're just going to right click and say we just want to exit the position. Not with a stop, we just want to sell it at the current price. Okay, so that's that one. Okay, so we've looked at O&O. Let's come and look at Oxy. So, and again, I was just kind of clicking through, linked the chart, and you can click through pretty quickly, and so with here, and like someone said, maybe you want to look at a longer term view of some of these before you look at the shorter term view. And if I had these lines drawn, I'm thinking that, yeah, so it was downtrending. The energy sector was getting kind of beaten up. We had this cup and handle pattern form. This is a 2-year chart. And then the stock started, then it broke out, hit a new high. But like many stocks in the energy sector, thank you, Strait of Hormuz, it's been a she loves me not kind of time of it, and there's been some pulling back, but we are now seeing this break above this diagonal resistance line. And some might say, well, I see it as kind of a bit of a Willy Wonka, if you will, or a bit of a, now, if you're looking at this and saying, I'm seeing a head and shoulders or a double bottom here, and I'm not seeing it quite broken out, because you're always going to see a diagonal resistance breakout as part of a double bottom pattern, right? So if you wanted to err more on the side of caution, you might say, well, I'm going to wait. And you might say, well, you know what? I'm willing to buy the stock. And if it does come back, pull back, maybe I could sell that covered call. Yeah. So this, somebody's asking about these numbers here at the top. That's a script And there's in the trade management mini session playlist, there's a short video on how to add scripts, and that's in there. The script is also in the post pinned to the top of my Twitter feed or my X feed. So, but if we wanted to just say, okay, we recognize that this pattern is setting up and not quite complete, but we'd like to trade this diagonal resistance breakout. And where might we put a target? Well, we might say, this 67-ish level looks pretty solid, 66, 67. It's currently trading at $60.70. So if we said, okay, we'd like to make this a target, and we're going to put our target at 67. If you can make $6 on a $60 stock, that smells a lot like 10%. And how long might that take? Well, it might never happen. It could take, 3 weeks. In an average day, the range on this stock, in other words, the amount it moves from top to bottom is almost $2, $1.93 over the last 14 days. So to move $6, I mean, is it unreasonable to think, that it could happen in a week or so? Sure. And if you place this trade, and this is one of the things I did as a client, if I placed that trade but said, hey, you know what? I want to wait. I would have waited for it to break out. I would put in the comment section that I wouldn't have placed the trade yet. Okay. But I didn't want to miss placing an example trade. I was always trying to mimic what the instructor was doing in paper money. So our target is on this one, 67. And our exit on this is going to be, hey, today's low, like if we're using this line here, say around 58, what was this one? 57, 56. So let's call that 57, 56. And just by example, if we went 2% below that, it would be 56.40 for our stop. Now, what happens if this starts really clipping, comes up, comes back and retests, and then starts to move again? Can we move that stop up to 2 or 3% below that 60, 50-ish kind of line, 60, 72? Absolutely. A stop isn't a static thing. It can and should be adjusted as resistance and support levels indicate, right? So we're going to look at buying, in this case, if it, and you might say, well, I'm going to leg in, I'm only going to buy half a position. We're going to go ahead and just buy our full position with our OCO bracket. We're going to do 400 shares. And our target on this is going to be 67. And our exit is going to be 56.40. And we're going to make these both good till canceled. So this is a stock with a target, but this is a target based in a different way. So this is a swing target, and a swing target is the previous high. Now, we don't have a lot of time left, but if we were to look at PSX, Phillips 66, here's a cup and handle pattern where it is breaking above. And we're seeing this is a pretty common pattern in the energy sector right now, isn't it? And so could we say, well, this went from, say, 155 to 180, so about a $25 move, $24 move. So could we make our target then 204? We could. Could we make our target a swing target of 190? We could. There isn't a right or wrong answer. And what would your position size be? Well, maybe 150 shares in this account. If we're saying we want our max position size to be no more than $25,000. So, and this one would be based on the width of this cup and handle pattern. Now, if we looked at UNH, we have a bull flag pattern here where currently it looks like we'll have, and this pattern's changed since I last looked at it, a close above the high of the low day. And so might we take this pattern and say, well, if we wanted to put a target on it, you know, if we duplicate that, here's how one might do it. You know, if the trades that we did weren't enough of an example to wet your whistle and you wanted to practice some more, you know, so somebody's asking if I've covered all the patterns. Here's another couple of example trades that you might want to consider. We have not covered all of the patterns that there are to cover in the world of technical analysis. I will post a chart on X and we'll go into more details on that next week. But we did look at a head and shoulders pattern. We did look at an inverted head and shoulders pattern. We did look at a cup and handle pattern. We did look at a bull flag pattern. So we looked at several patterns, but really the theme for today was to look at a pattern and to use a pattern to help you determine both a target and an exit. Yeah, we didn't look at Fibonacci patterns today. We'll probably take a whole class to look at that. So guys, thank you so much for joining me today. We now have to wrap, but we did place 2 example trades. So we closed out our trade on Devon. We opened a new position on Oxy, and then we have a position percolating, if I go back to when we placed them, on Oak. And the price, for some reason, it's saying it's, let's go in and say, okay, you want us to pay a few more dollars. We'll give you a little more, an extra 20 cents a share. There we go. Okay, so we did trades on Oak, and then we followed up on one of the example trades we placed last week to say just because we have a target doesn't mean that we can't exit if we get close. Or, you know, if we have a break in support, it doesn't mean that we have to wait to be stopped out either. So guys, hit the like button, subscribe to this channel if you haven't done that already. Follow us in the land of X, Scott Thompson CS, Barb Armstrong CS. Come and find us on LinkedIn as well. And have an awesome rest of your day. Up next is Mike Fairborn with swing trading. So I'm sure you'll learn a lot from that. So stay tuned. I'll see you in a webcast coming up soon. Take care, everyone. Bye for now.